Hello, teachers. Today we will present a financial performance analysis of Vietnam Airlines covering the periods from 2021 to 3Q 2025. Next. And my group have three members, and my name is Ngọc Anh. Next. And this is on table of contents. And firstly, I will talk about the introduction. Vietnam Airlines under the stock tickers HVN is Vietnam National Flag Carriers operates at the full service airlines and listed on the Ho Chi Minh City stock entrance since 2015. The, the airlines played a vital role in the national connectivities tourism development and international trade. In the 2024, Vietnam Airlines operated approximately 100 aircraft, serving more than 50 domestic and international routes. The airlines reported net revenues of 105.8 trillion Vietnam dong, representing a 15.6 percent year-on-year increase, and with a reflect a strong recovery following the COVID-19 pandemic. Next. The objective of the report is the evaluate the investment register of Vietnam Airlines stock by the applying both financial analysis and technical analysis, and the study incorporates strategies platforms such as Pastel analysis and portfolio focus for forces along with case financial indication and stock price movement to revise and inform investment assessment and recommendation for Vietnam Airlines. Next. Okay, then next is financial analysis. In this class, I analyze the revenues and revenues growth of Vietnam Airlines from 2021 to 2024. In the 2021, due to COVID-19 lockdown, revenue fall to 27 27,900 911 billion Vietnam dong to a lower level in many years. Passengers flight almost stopped. So Vietnam Airlines only kept minimal operations such as repatriation flights, cargo service, and cost cutting to service. In 2022, revenues recovered strongly, increasing by over 150% to 70 billion 410 Vietnam dong. This was driven by the reopening in the international tourism and strong revenge travel damage, and together with the high ticket price to offset rising costs. During the 2023 to 2024, revenues continues to roll to 105 billion 942 Vietnam dong. But at a slower pace. This shows the company's move into the more stable phase, with growth coming from network optimization and focus on high machines international routes. By the first 9 months of the 2025, revenues reaches nearly um, 88 billion 90 920.22 Việt Nam đồng, confirming strong air travel demand and Vietnam Airlines leading position in the full service airline segment. However, higher fluid costs and dock pressure remain case challenge. Next, look at the profitability ratios. Vietnam Airlines showed a clear recovery change from 2021 to 3Q 2025. Um, although reserves was heavily affected by industry's condition and input costs. In the 2021 and 2022, cross profits margins remain negative at the minus 30 35.9% and minus 4.1%, relating higher flex cost, especially flow rises from 2023 our profitability improved significantly. Profits matches turn positive and 4.2% in the 2023, increased to 13.1% in 2024 and reaches 17% by 3Q 2025. These recordings were driven by three main factors: strong passengers demand covering, higher air freight due to short-term supply demand imbalance, and effective cost restructuring. In addition, Vietnam Airlines shortest capacities tower long haul international routes with the overhead machines, and this improvement is also reflected in ROS and RO8. Both ratios were negative during 2021 to 2023, but turned positive from 2024. Confirmation that Vietnam Airlines core operation have generally returned to profitability. And as regarding ROEs, the indicator shows strong volatilities and should be interpreted with caution due to negative shareholder equity over multiple years from accumulated losses. ROEs is largely technicals in nature and does not accurately reflect true profitabilities. The sharp increase during 2022 to 2023 mainly reflect government-led restructuring and capital injection. With the happen, HVN avoids liquidity stress at the national flag carriers. Vietnam Airlines benefits from large, large scale influential financial support, providing the foundation for recovering as the international aviation reopens. And next inches, she will talk about continue.
Hello everyone. So my name is Ying Chi. Next, I will continue. I would like to talk about efficiency ratio. Vietnam Airlines efficiency ratio reflects the characteristics of the airline business model, where case equalities from customer before payments are made to supplier. Accordingly, Vietnam Airlines case conversion cycle remained negative throughout the 2021 to 3Q 2025 periods, fluctuating between minus 110 and minus 82 days. This indicates a clear operations cash flow advantage and uh, reduce short-term working capacity resource. In terms of components, day sales outstanding DSO improved significantly during 2022 to 2024, reflecting better receivable collections. However, the increase in day sales outstanding in 3Q 2025 suggests a trade-off between faster revenue growth and slower cash collections, and their inventory outstanding remain low and stable, highlighting effective inventory control in industries where inventory are high in value. As a resource, the combinations of low DSO and short DISO and high DPOs allow Vietnam Airlines to maintain a negative case conversion cycle. While this is a favorable feature, it also inflates a degree of dependence on extended payment terms, which need to be managed carefully going forward. Next. In terms of solvency, Vietnam Airlines financial safety indicator clearly reflect the problems impact the COVID-19 crisis, during which the company relied heavily on financial leverage to sustain operations. During the 2022 to 2024 period, the debt to total assets ratio remained at an alarmingly high level, exceeding 100% and peaking at 129.5% in 2024. This indicates a strong dependence on debt financing in contexts where equities were severely improved by accumulated loss. Under the proportions of long-term debt, this lie over time, the overall debt burdens remain substantial. Many financial risks were not materially reduced. A meaningful improvement only occurred in 3Q 2025 when EBITDA turning positive and the debt ratio declined to 91.4%. This marks an important restructuring milestone and signal early improvement in Vietnam Airlines capital structure. However, despite EBITDA turning positive, leverage presume remains high, keeping financial risk elevated, particularly due to short-term liability and sensitivities to interest rate volatility. Therefore, while solvency indicators confirm that Vietnam Airlines had entered a recovery phase marked by government-led restructuring, the company must continue strengthening its capital base and reduce leverage to achieve long-term financial stability. Next. So this slide summarizes the work of Vietnam Airlines in the current economic and industry context. In terms of trends, Vietnam Airlines benefits from these positions at the nation's largest carrier, a wide road network, and a relatively strong operations cash flows, reflected in a negative case conversion cycle. There is important advantage in a capacity-intensive industry like aviation. However, the company also faces several weaknesses, including high financial leverages, a thin equity space, and high operations costs, which make profitability sensitive to cost flow fluctuations. look at the opportunities, the development along the international airport, and the recoveries of international tourism. We are favorable conditions for Vietnam Airlines to expand in hub and spoke network and focus more on long-haul routes with higher margin. At the same time, there are clear threats, especially fuel price vol- uh, volatilities, exchange rate and interest rate risk, and strong price competitions from low-cost carriers such as Vietjet and Nest. Uh, this saw the current competitive pressure faced by Vietnam Airlines, especially from the low-cost airline segment. The most significant pressure comes from high industry rivalries, aggressive expansions by low-cost carriers such as Vietjet and Pampo Airways have intensified commissions for market share and trigger frequent rival. Customers are highly price sensitive, with further increased downward pressure on ticket price, particularly on core domestic routes. In addition, supplier power is high, mainly due to dependence on aircraft manufacturing and fuel supplies, limited airline ability to control operations costs. Meanwhile, the threat of new entrants remains low, as the airline industry requires capital investment and strict regulatory compliance. Overall, this competitive environment places strong pressures on Vietnam Airlines profit margins, especially in the domestic markets. Next, so long-time international airports as a target turning point for Vietnam aviation industries. Also on the map, Long Thanh is planning become Vietnam's longest airport and a regional aviation hub connecting Southeast Asia with Europe, Northern Asia, and Australia. Its main objective to reduce congestion at Tân Sơn Nhất Airport while expanding nation aviation capacity and connectivity. From logistics respectively, Long can also support air cargo operations. Strengthening Vietnam roles as a regional transport and logistics hub. For Vietnam Airlines, this creates a strong foundation to expand along hub routes, develop a hub-based network, and improve long-term competitiveness. Next, this summarizes the overall outline for Vietnam Airlines. First, Vietnam Airlines has weathered the storm. The company successfully the liquid crisis and had regained revenue from momentum as travel demand recover. Second, financial disciplines remain critical. Continued debt-free restructuring and switches training are essential to support sustainable recoveries, especially in high-cost and competitive environment. Last one, long-term international airport is key long-term from driver. This new infrastructure provides a strong launchpad for Vietnam Airlines to expand in network, improve margins, and enhance operation efficiency. Overall, Vietnam Airlines is a historic gesture to response repositions its standing chances nurturing from a phase several driven recoveries to one of value reacting role. And next, I would like to invite Jaman.
The next is technical analysis and recommendations. The figure illustrates the image city remain below the signal line in zero level, indicating that Paris momentum still dominates despite slightly weakening ceiling pressure. HVN is traded below
MA20 and MA50, confirming that short in medium-term trends have not yet improved. The RSI are around 40, showing weak momentum in caution investor sentiment. Overall, the stock is consolidating with moderate development in nuclear breakout. Therefore, at the current price range, HBN does not provide a clear buy signal. The technical recommendation is hold. The next part is part 3 conclusions. In conclusions, this report shows that Vietnam Airlines or HVN currently in the post-pandemic recovery and financial normalization phase rather than the natural growth stage. From the macro industry perspective, HVN benefits from the recovery of air travel demand and its role Vietnam's national flag carrier, which provide a structural advantage, such as strong brand recognitions in road access. However, this advantage are partly upset by instant competitions, follow full price in sensitivity in interest rate. From the financial perspective, operating performance has improved, but have financial leverage in accumulate lose remain key risks. At the same time, technical analysis indicates sideways rise movement with no clear buy signal. Therefore, within an economic framework, HVN can be considered a recovering company with improved operations, but caution weight in upsurge approach remain the most appropriate conclusion at this stage. Based on combined financial and technical analysis, HVN does not currently present a clear buy or sell signal. Although operating performance is improving, high financial leverage continues to pose a significant risk. At the same time, technical indicators show sideways price movement with no confirmed trend reversal. Therefore, a hold recommendations is operate spending clear improvement in financial stability or stronger technical breakout. Thank you for attention.